me show you my gold position. Up 5,400 bucks on gold here. And it is trading, as I mentioned, just near a record all-time high. Gold is at 2160 almost, guys. All-time high, just getting hit just before we stepped on the stream. 2164.5. That's an all-time intraday trading high for the price of gold. It just keeps going and going. We're here together, here to watch several key things happening this morning. We have, and let me pull this up for us. We have the ECB press conference, which starts in about 5 minutes. At the same time, we also have a repeat. We're going to run it back with Jerome Powell testifying in Congress. Yesterday, I got borderline triggered listening to Jerome Powell answer really dumb questions. So let's see if I can get a little less mad today or more mad. Could be kind of fun. We have employment data that came out here this morning. Unemployment claims came out just exactly as expected. 217,000 people filing for unemployment. Didn't move the markets too much. The S&P 500, however, has rebounded from its sell-off yesterday. Let's talk a little bit about that really quick. So let's look at this. So what we have here is the S&P 500, which has been so incredibly resilient. If you're somebody watching indices, let me just say this. I am currently, I am bullish overall on indices, but in the short term, I'm waiting for some form of a pullback. But I'm waiting for it. I'm not betting on it. There's a very big difference on this. Because if I was looking at this and I was shorting the S&P 500 recently, this would be an incredibly frustrating move to watch. I've been on the sidelines. I've been waiting patiently for the S&P to come down, to pull back. And we have not seen that yet. In fact, it's been many, many, many weeks since we've seen. We'll go to the weekly chart. It's been like a crazy, almost record-breaking number of weeks since we have had a 2% or greater pullback, okay? At any given time, the S&P 500, close to close, has not had a 2% or greater pullback. That's the biggest one, 1.58% in terms of close to close. This is really crazy. Now, here's the craziest part of it all. You might say, that means you got to be short, right? The craziest part about it all is that this move could repeat itself again. So, as crazy as it might sound, remember, there's an old adage in financial markets, and it's very, very true. The market can remain irrational longer than traders can remain solvent, right? Many, many, many people have tried to call tops in the S&P 500 and lost a lot of money doing so. It's an index that generally goes up. Now, it doesn't always go up. There are terrible periods of time where if you're holding the bag on stocks, it's an incredibly painful process to wait through. But there are other times, I mean, go back to periods like this. I mean, look at this. Here is an example of if you were trying to short that, it was incredibly painful.
Did you know that we have 100% free trading tools and data available for you on our website, a1trading.com, right now? We have free courses for you to browse. You can also check out things like retail sentiment and free articles from our analyst Frank that include things like Edgefinder screenshots and trade setups. You can find all of this and so much more for free right now on our website, a1trading.com.
So my point here is this move, while I think it's a bit overdone, I think it's due for a corrective move. It doesn't have to, right? It doesn't have to correct just because I want it to. Now, that being said, if it does, if we get a significant pullback, I would call a significant pullback 5% or greater. If we get a 5% or greater pullback, I'm very curious to see if I can find some longs. If you guys have been watching my channel for a while, you know that I caught a lot of this move to the upside. I've missed the last leg of it higher, but I took profits around this candle here. Obviously, hindsight is a little bit painful to watch this thing continue to run up, but I pretty much caught the low of November, October, November. I bought it November 1st. I bought the S&P 500, and it was my biggest trade on record. I closed out for a profit of somewhere in the region of $40,000, which for me is and for most people is a really big number. Now, there are other traders on social media where 40 grand is not that much, right? But for me, that's huge. And for me, that was a major milestone. And I have to also add some context. Before then, I caught several losing trades at a couple grand a piece, turns into some drawdown. So my point is, you can catch those big winners, but you got to be patient for them. Speaking of big winners that I have now, while I'm not in the S&P 500 and there's a bit of FOMO for me, I am fully in on this gold move. And it's rocking and rolling. Let me show you my gold position. Up 5,400 bucks on gold here. And it is trading, as I mentioned, just near a record all-time high. Just a little bit of for fun here. GLD, the stock market ETF that tracks the price of gold, is trading at an all-time high as well. It's the first time I've ever seen GLD in the $200 per share of this ETF. Kind of crazy. It's how I trade gold. In the US, we're limited. We can't trade CFDs. I can't trade XAU USD on a regulated safe broker, so I don't trade XAU USD. I trade GLD. The other option you could do in the US, by the way, is you could trade on the futures market. So we're watching this gold move, and where's it going from here, right? Again, that link, thank you, Chandler, for that, is right here. If you guys would like to check out WeBull, it's a broker that I use personally. I can trade options on there. That's the other reason I trade it, is because I trade options and ETFs like gold ETF, etc. So I like to have it all in one broker if I can. Anyways, gold just keeps pushing, and I trailed a stop yesterday, and to be honest, it's probably time to trail it again. This gold move is currently sitting at 1, 2, 3, 4, 5, 6, 7 days in a row. 7-day rip to the upside on the price of gold. So how do we approach that? Do you sell it and just take a profit? I personally do not. I'll tell you why. A couple reasons. Economic data is slowing in the United States. At the same time, inflation is kind of sticky. At the same time, you have NYCB, which is a bank, a regional bank that is kind of collapsing. I think they had a bid that came in overnight or yesterday during the trading day to kind of help to save them. But my point is, regional banks are under pressure. The Bank Term Funding Program that was initiated by the Federal Reserve last year, right around this time, it expires March 11th. I've put out full videos talking about this. Nobody's talking about this. If you want to really understand why gold is moving up, it is because there's some stuff spewing under the hood. This stuff really matters, right? If the economy is going to cool, it's going to slow down, and jobs kind of cool as well. But the problem is if inflation stays sticky, that is the sweet spot. It's called stagflation. If I'm not necessarily saying that's what's going to happen, but that is increasingly likely recently with some of the data that we've gotten. That, in combination with the idea that rate cuts could be on the horizon, are why gold is moonshotting right now. It looks like a cryptocurrency almost.
A Fed rate cut would be bullish if the Fed cut rates on, declining inflation, rising GDP. But I also think that if they cut rates on increasing inflation, lower GDP, that's the bearish case. So although rate cuts can be good, they can also be bad. It depends on the scenario. I don't know. That was a random thought I had. Just wanted to know what you thought.
So, okay. So yeah. So when you say bullish, are you talking bullish for gold specifically, or just like generally? Like,
oh yeah, that's right. I didn't specify.
Yeah.
let's talk gold, I guess. So, if we cut based on, you know, a good economy,
Hmm.
lower inflation, uh, that's probably not great for gold. But if you
Right.
get that stagflation issue where inflation's rising and GDP is, you know, um, still falling or halting, that could be that bearish case for gold that we're talking about. This sort of um, wait, maybe I mixed it up.
No,
The
no, you're
stagflation
good.
issue.
That's the stagflation. You're right. That's like the super bullish version of gold.
Yeah,
You're
so
talking
inflation
about,
rate is coming up and GDP is coming down. That's the
yep,
stagflation issue for gold.
yep. So in
Um,
that case, that one's pretty obviously like that's going to be I would argue that that's like what's contributed to this rally. So and then you were talking about the idea that if growth kind of like stays okay, but inflation comes down,
right.
in that environment, I wouldn't say this is bearish for gold. I would say this is just not as bullish. I would say this is like kind of bullish because you're still seeing inflation coming down, a weaker potential US dollar in that scenario, as money would flow foreign, it would go to other places, and a weaker dollar could help to lift the price of gold. But it's not going to be the same fear factor. There's fear in this one. And remember, with gold, for everybody who's listening, you got to understand, every time gold makes all-time highs in the last like 5 years, it's always on fear. Fear is what gets gold to go to all-time highs. And um, this is more optimism, right? This is an optimistic state where growth looks okay. And that's why the stock market ripped so hard here in the last few months. So in this case, I think stocks are looking better, right?
Right.
So stocks are better here. Gold is okay. It's going to do fine. The scenario that's bad for gold, what do you think that is, Frank? What's the bad scenario for gold?
Well, I would say that first case I was talking about where GDP starts to rise,
Yep.
inflation either is moderate or, sort of, leaning towards the downside, back towards the 2%. That's where I don't think it will be as bullish. If inflation is rising, however, that is the bullish argument for gold.
Yeah.
Um,
I think
so
if you have the
yeah,
combination of the two, though, this is something to think about too. What does this environment tell us? This is creepy for gold, because look at this. If you have growth accelerating and inflation is accelerating, the Fed this is ammo for the Fed. If the economy's okay, they can say, hey, look, we have plenty of growth. We have a strong economy, so we can raise rates to combat inflation. The reason stagflation is so powerful for gold bullishness is because in this situation, there is no ammo, because there's not growth to fall back on,
right.
but you still have to keep interest rates. Like you have to cut rates so that you don't lose everybody's jobs, so that you get caught in this fear environment. But
Right.
I would say this was like 2023. 2023 was, you got ammo in the growth, and there's something there to deal with inflation.
And I think that top scenario plays into tomorrow's NFP as well.
Yeah.
So we're going to need to see, decent numbers from NFP tomorrow. If we see a miss, that's not going to be good.
Yeah.
Well, it's going to be good for gold, but it's not going to be good for, the Fed. Like their ammo, as you say, is running out. So, yeah, the NFP labor ties strongly into, economic growth and spending and all this stuff. So if
Yep.
labor and GDP are coming down and inflation is stubborn or ticking up, that's bad.
Yeah.
And although we've seen like the last 3 or 4 months of NFP coming higher, this one is just very important. I think the trend has to continue, and if not, then we're probably in more of a fear scenario and probably more bullishness for gold.
Yeah, no, I think you laid that out well, because tomorrow's, NFP is just so critical for the markets, because again, one of the, I guess, when we talk about that concept of ammo, has been the jobs market. This is the ammo, right? As you pointed out, the importance of strong jobs is that, it's going to it's that backfall where the Fed can say, well, we can still afford to keep interest rates high to get that inflation under control. If this slides, though, let's just say we get, much less jobs created. Or, as we know, Frank, we have been frustrated by this in the past. Let's say they revise, our yellow line represents revisions that we've added just because of how important they are. Let's say they revise this number down and jobs. I mean, there is that potential for that ammo to be threatened tomorrow. Now, granted, there's also the potential, we have to be, unbiased. There's a possibility that the labor market just stays strong and we revert back to growth is okay and inflation is sticky, but at least you still have growth that's okay, right? So we have to be receptive to, but I do think you laid that out well. The jobs data tomorrow is just so important.
Yeah. No, and revisions are key too. If they come in and it's lower, if the next month's NFP comes out, revisions are lower, that's pretty concerning. But we can't, there's so many scenarios that we can run through. What's more important to me is like, what do we see now? Because that's just how the markets can react, and that's how we can trade. So,
Yep.
Yeah.
Well, and there's something to be said too about when it comes to this environment, Frank. My pettiness of wanting the indices to come down because I want to buy them. And we go back to that expression that we say often. A lot of times, the things that I hate the most are just things that I wish I owned. And, I want the NASDAQ. But you mentioned something there. As traders, you have to trade the environment you're in. And, when you look at stuff just rallying, and there was a time, Frank, I think you and I discussed, it didn't matter in 2022 what any of the data did. It almost like would sell off on anything. It would sell off on good news. It would sell off, if jobs, I remember, Frank, this was so frustrating in 2022 because you and I mean, me way more than you. I think you dodged a lot of 2022's agony.
Yeah,
I did not. I was agonized.
That was the lost year. I was still in college trying to graduate.
Oh, man. I should have just come to college with you, man, because I shouldn't have been in the office. I was just watching my account get destroyed. But anyways, 2022, what was so frustrating, Frank, was this. Okay? Jobs would come out. Jobs would come out good. And the market would say, that's terrible because they're going to keep interest rates high. And the stock market would sell off. But then jobs would come out bad and people would say the economy is terrible and the recession is going to deepen. You could do no good in the eyes of the market during that time. Right now, it's the exact opposite. In the eyes of the market, it seems like right now. And as a trader, you have to acknowledge this stuff. 2024, if jobs are bad, they're going to say, great, we can cut rates. And if jobs are good, they're going to say, look, we're resounding, a resilient economy. So I do think that as a trader, right now, I think you buy dips until the narrative changes. So do you agree with that? I mean, I don't think buying up here per se, but if you get a dip, that's my case for why I think you look for opportunities.
Yeah, and that's what I'm trying to convey is good jobs data, good economy, lower inflation is good for rate cuts. And rate cuts are then bullish. We're like, okay, we're doing well. Inflation's doing what we want. So that's the bullish scenario. But if we're doing bad, if NFP flips, the narrative is completely different now. It's the opposite. Bad economic news is bad. And although it can cue rate cuts, it's going to be that bearish scenario for rate cuts.
Yes. Yes. No, and I think that, you know, just us talking about that, Frank, is like there is a narrative effect when it comes to stocks that there is not when you're trading strictly like gold. Like I think this is one reason why I actually really like trading gold, is because gold has a little bit less like it's not manipulation. I think that's a cop-out word. It's not manipulation, it's narrative, right? Stocks have like super strong narratives attached to them, whether they're in a bull trend or a bear trend. Whereas gold, it's relatively straightforward with jobs. Like jobs, we can say tomorrow pretty decisively. Most likely, if you get a really hot jobs number, it's going to take out some of the steam of this rally of gold. And if jobs numbers come out really cool tomorrow, it's going to, you know, elongate this trend to the upside. So in some ways, I do like that component about gold because it's just a commodity. It doesn't, you know, have a bunch of CEOs involved in it and a bunch of crowd mentality. I mean, there's still crowd mentality. It's just, I do kind of like that simplicity to a degree.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.